Today, I want to talk to you about something that I know many of you, if not actually practically all of you, have wondered at one point in time or another. And that is, can you actually make a living trading the currency markets or trading any market for that fact? You see, when you first start out trading, and it was the same for me, I'm sure it was the same for you, but when you first start out trading, you have all of these expectations about being able to make, extreme amounts of money very, very quickly. And some of us are lucky enough to be successful relatively early on. And then there are going to be others that it takes a little bit longer to get to that point of success. But all of us will go through the cycle at one point in time or another where we kind of have these expectations that are far too high for what you can actually achieve. And then actually, believe it or not, you get to a point where your expectations are actually too low for what you're trying to do. So in this video right here, we're going to discuss exactly that. We're going to talk about, what is realistic, what's too conservative, and then where the balance is and how you should actually go about doing it if your main aim is to make an income trading the FX markets or, as I said, any other market. Now, the first thing that I want to do before I get into all of that is just sort of clarify what I meant when I was saying about if your main aim is to make an income, because I'm sure many of you out there will be sat there watching this and thinking, well, of course it's to make an income. I want to make money. Why wouldn't it be? And that's absolutely correct. But you have to understand that there are going to, if you've got different time horizons, the way that you approach the market is going to be slightly different. So if you're looking to trade to make an income, then obviously your time horizon is a few weeks to a few months. But there might be other people here that are looking at this more from an investment perspective. And it's not to say that they can't make as much money, over a 3 or a 5 year period, but the way that they do it might be a little bit different. So this video right here is talking to the people that really are looking to derive some sort of a return from their trading on a shorter term basis, rather than those that are willing to give the markets 1, 2, 3 years to be able to play out. As I said, at the end of those 1, 2, 3 years, you might end up in exactly the same place, but the way that you go about it is slightly different. So first, let's talk about what is sort of extreme. Let's get that elephant in the room out of the way. So what is it when it comes to your trading that's it's ridiculous? It's something that you're never going to achieve. And if you do go for it, you might be lucky enough to achieve it 1 month or 2 months. But after a period of time, you're going to end up blowing up. And that is trying to take an approach where you're taking, $100 or a £1,000 account and you're trying to turn that into a £10,000 or £100,000 account in a very, very short space of time. And by short space of time, I'm referring to maybe a month or 2 months or 3 months or something like that. Those of you that are trying to take your accounts and 10x it in the space of a month or 3 months, that's just it's not realistic. You're going to have to take excessive risk to be able to do that. And by taking excessive risk, you might be lucky from 1 month to the next, but it's going to encourage you to take bad habits. And in the long run, you will end up blowing up. And I actually remember going back maybe 10 years, I was working with a guy, his name was Ben, and we were talking about this. So he was kind of trying to make an income from his trading. And he called me one day and he said, guess what? I managed to double my account today. And I said to him, well, that's fantastic. Well done. I didn't want to discourage him, but I said, please never do that again, because the likelihood of you being able to repeat this extreme feat of doubling your account in one day, is very, very slim. And you're probably going to end up blowing your account. And sure enough, a couple of weeks later, we had another conversation. I asked him how he was doing, and he said that he ended up losing all of the profits that he made and then some, because he had bad habits. Now, fortunately, I was able to get through to him the right way to the trade. And in the end, he ended up being successful and making money from his trading. But those early days there, if he just had have listened to me, he wouldn't have ended up losing all of that money initially. So if your expectations is to double your account every month or 10x your account every 2 to 3 months, it's probably not going to happen. And I will caution you against that. Now, the other side of the coin is being too conservative. sometimes you either come to the markets from with a conservative mindset, or sometimes you take on that conservative mindset because you've had one or two bad experiences trading, and you sit there and think, oh, actually, you realize that you can't double or triple your account in a month, and you go to the other extreme where you're looking for 1 or 2% a month. And whilst there's no problem having modest returns, going for the 1 or 2% a month, and if you've got a large account, that might be the way that you want to go. And if you don't have a lot of time or you can't put a lot of effort into your trading, then 1 to 2% a month is absolutely fine. But you have to understand that as active traders, which is essentially what we are, you can actually achieve a much better rate of return than 1 to 2% a month. What I say to the traders that I work with is that we should be shooting, from a realistic perspective, you should be shooting for sort of the 10 to 20% a month. Okay. You're not a hedge fund. You're not one of the, an equity fund or something like that, where you've got investors and your volatility has to be low. So your drawdowns have to be low, which obviously is going to limit your upside potential. You're a home trader. Hopefully you're not trading with the mortgage money. So you're trading with money that you can afford to lose, and you're not trading with your retirement money, which you would want to be a little bit more conservative with. But when you're trading the markets, you want to almost look at it as being risk capital. Okay, so it's capital that you can afford to lose. And we'll go into portfolio allocation and asset allocation in a different video. But essentially, when you're looking at your more aggressive trading, it's not going to be your entire pot of money. It's not going to be everything that you have to invest, all of your life savings and things like that. You want to take a portion of that capital and allocate it to a more aggressive approach of trading, where you're looking to make 10 to 20% a month, or somewhere in that sort of region there. Some months it may be more, some months it may be less. And what you have to understand is that as traders, the one thing that we don't have control over is what the markets give us from one month to the next. So there might be some months where you could do more than 10 or 20% a month. And then there are going to be months when you might do less than that. Some months may even be negative. We don't control which way the markets go. All we can do is we can execute our strategy, execute according to our plan, and then take enough trades that allows the balance of probabilities to play out, that allows our edge to play out, which then will allow us to see money and a return in our account. Okay, so in terms of what you can make trading, can you make a living trading? Yes, you absolutely can. Obviously, it depends on how much you have in your account. So if you've got a trading bank of £100, then 20% a month is £20. It's probably not something that's going to set the world alight. However, for those of you that are sat there thinking, well, you know what, I'm never going to get to a point where I could trade a £10,000 account and make 20% in a month, which will be £2,000, or a £100,000 account. I'm never going to get to that level. What I would say to you guys and girls is focus on learning the skill of trading, and then know that there are actually, lots and lots of proprietary trading firms out there today, particularly online, which they didn't used to be, that will give you trading capital if you can give them a proven track record. And that's not a track record of lottery ticket wins and getting lucky here and there and not managing your risk. But if you can learn to trade properly and you can manage your risk effectively, and you can show that to somebody, then you can raise capital to trade on behalf of a company or other people and things like that. And that's where the opportunity is. So don't sit there and look at this and think, well, I'm coming from a position where I'm never going to be able to have that sort of a trading account, so what's the point? Focus on learning this skill of trading and knowing that, once you get that skill, once you build up that track record, 6 months is actually enough. So for some companies these days, people will give you capital, and then what you'll do is you'll get into a bit of a profit share where they will give you X% of the profits for the capital that you trade for them. Okay. Now, when it comes to trading the FX markets, to be able to make an income from your trading the currency markets, you have to understand that they're a little bit different to other markets. So whereas with the equity markets, it lends itself more to a buy and hold, to sort of looking to just buy the dips for big swing trading and things like that. With the currency markets, you have to be a little bit more aggressive with the way that you have your stop losses and your profit targets and things. So you're not necessarily going for those big 3 or 4 to 1 reward to risk ratio trades that you could get in the equity markets, because you get those big parabolic moves that go very, very quickly. The currency markets, they aren't quite as volatile. It does make them easier to trade in one sense, but from the other perspective, because they're not as volatile, you need to understand that if you're looking to trade those big swings, you're going to be sat in trades for weeks and sometimes even months. So what you need to do is you need to adjust your trading strategy. And the way that I teach people to trade is to have a slightly tighter stop loss, not so tight that you're going to get whipped out of the market, very, very quickly, but not so far away that you need to give the market so much room and you need to give it so much time to actually hit your profit target that you can be in there for weeks or months. And the last thing that I want to leave you with is that being able to make an income from your trading isn't dependent on whether you're trading short term or long term. All right, so whether you're day trading the markets or whether you're swing trading the markets, you can make an income both ways. And in some ways, it's actually easier to make money if you're going to be swing trading the market, because you give yourself more time to be able to analyze the trade. So for those of you looking at this thinking, oh my gosh, to be able to make a significant amount of money, I need to be a day trader. No, you don't. You can do it passively. You can spend 30 minutes a day looking at your charts and just maintain a portfolio of positions, which is what I do for the most part these days. Maintain a portfolio of positions and still be very, very successful. If I look at the trades that I'm in right now, I'm 3%. It's Tuesday when I'm recording this. I'm 3% up on the week. And all of those trades that I've taken off of the daily chart that has taken me literally 15, 20, 30 minutes of an evening to look at, enter the orders, walk away, and that allows me to do that. So that's sort of just a little bit of evidence or proof there that it is possible even when you're trading longer term. Okay, so that wraps it up for this video here. Hopefully that gives you a bit of an insight as to whether you can make money and you can make an income trading these markets. The short answer is absolutely yes. The long answer is obviously what I've been through this video here. But what you need to do, what you need to take away from this is, yes, it's possible. What you need to is focus on learning your approach and really mastering your approach. Even if you don't have a big account right now, it's something that you can achieve later, either with other people's help or through savings of your own. And then obviously, if you're trading the currency markets, it's to find a strategy that allows you to play the dynamics of the market the right way. Most people that try and trade the currency markets, they do it absolutely the wrong way, and then they wonder why they don't end up making money. My focus when I'm teaching people to trade is on getting them to see those wins, to let the cash register ring. It's a quote from a trading book that I love by Marty Schwartz, Pitbull. But essentially, it's getting paid for your trading. It's not looking to swing for the fences, but just take singles and get paid. So each and every day you're closing some trades for profits. It reinforces the mental aspect of your trading, and obviously it's nice to look at it in your P&L on your bottom line. I hope you enjoyed this video. If you found value in it, please make sure you subscribe to the channel, you hit the bell so that you get a notification as and when I release a new video. Otherwise, thank you so much for watching this or listening to this, if you're listening to it on a podcast or something like that. And I look forward to speaking to you in the very next one. Take care now, and I'll speak to you all soon.